Friends, do you want to invest in the shares of Apple, Amazon, Microsoft, Google and other big companies of US from India, and that too in INR? Well, in this video, I will explain you how you can do that. So don't miss out this exciting video. So friends, there are two products which allows you to invest in the US stock markets from India, and that too in INR. The first one is Motilal Oswal Nasdaq 100 Index ETF Exchange Traded Fund, and the second one is ICICI Prudential Nasdaq 100 Index Mutual Fund. So Motilal Oswal is a ETF, whereas ICICI is a Index Mutual Fund. Okay, so both of these products invest in the companies which are forming part of the Nasdaq 100 indexes, right? So both these products are index fund products. Okay, there are many other products in the stock market which allows you to invest in the US stocks, but I found out these two products very useful, and hence I'm making video about them. But this is not any paid or sponsored video. Okay, and since both these products invest in the Nasdaq index fund, so in this video I will explain you what is Nasdaq first of all. Second, we will see what are the companies which form part of this Nasdaq index. Third, we will see why you should invest in the US stocks or Nasdaq index, right? Why you should invest. Then fourth, we will see what are the returns given by the Nasdaq in the last 10 years and 5 years. And then fifth, we will see the risk, what are the involved by investing in the US stock markets and Nasdaq as such. And then finally, we'll see the more final details about these products such as AUM, NAV, expense ratio, right? So this is the summary of today's video. So what is Nasdaq? So Nasdaq is an index of the United States, that is US stock markets. Okay friends, so like how we have Nifty and Sensex in India, in US there is Nasdaq and S&P 500, which are the two main indexes of the US stock markets. Okay, so Nasdaq consists of 100 large non-financial companies in its index, right? So it does not have any financial companies such as American Express, Bank of America, Goldman Sachs, etc. So Nasdaq 100 consists of largest non-financial companies, and most of the companies in Nasdaq are new age technology companies. Okay, so that is about Nasdaq index. And Nasdaq was founded in 31st of January 1985. And the Nasdaq is rebalancing of the Nasdaq is done every quarterly for the weights of the stock in the company's weightage is done rebalancing every quarterly, and annually the composition of the Nasdaq exchange, that is new companies come in and existing companies go out of Nasdaq annually. Okay, so that is about Nasdaq. So now let us look at the composition of the Nasdaq, that is what are the companies which form part of this Nasdaq index. The first one is Apple, which has 13.27% in Nasdaq. Second is Microsoft, which has 10.6%. Third is Alphabet, that is the parent of Google, which has 7.16%. So Alphabet has basically two shares, Class A and Class B. Okay, Class A and Class B, and both these securities put together make Alphabet 7.16% in the Nasdaq. Then fourth one is Amazon with 6.93%. Fifth is Tesla with 4.66% in the Nasdaq. Then sixth is Nvidia, 2.8%. Seventh is Meta, Facebook company, 2.86%. Eighth is Pepsi, 2.1. So all these top 8 companies, if you see friends, form give a total weight of 50% in the overall Nasdaq index, right? These 8 companies give 50% weight in the overall Nasdaq index, and the rest 92 companies have another 50% in the Nasdaq index. And within this 8 also, if you see friends, the top 5 companies, that is Apple, Amazon, Microsoft, Alphabet and Tesla, if you see these 5 companies itself have 42% in the share of Nasdaq. So heavily loaded in the 5 companies in the Nasdaq, right? Apart from that, there are other well-known companies also in the Nasdaq which are forming part of the rest 50%, such as Adobe, PayPal, Cisco, Starbucks, etc. Okay, so now let us see why you should invest in the US stock markets or Nasdaq specifically. So the first point is, friends, you get the world's best companies, right? Okay friends, so the top 8 companies which I told you, Amazon, Apple, Microsoft, Tesla, Google, these are top companies of the world. These are business giants, and they just not only are the US companies, but they rule the entire business of the entire world, right? And so in one basket, through Motilal and ICICI, you get the top companies of the world in the entire basket through just one portfolio. That is the first reason. Second reason is you get diversification from Indian stock market, right? Basic rule of stock market investing is you should have diversification, and this product can provide you diversification. Third point is, friend, is that low correlation of Nasdaq with the Nifty 50. So friends, if you see, I've taken this presentation from the Motilal Oswal product presentation, which was done in last year, September 2021, and it shows that Nasdaq has only 20% correlation with Nifty, which means that, and this is on annual basis, right? Annual correlation, not daily basis, annual correlation, which means that when Nasdaq is high, Nifty generally is low, or when Nifty is low, Nasdaq is high. So it is almost, or the correlation is very less. It's a 20% correlation. So because of this low correlation, you get a good diversification in your portfolio, right? So one portfolio at least will perform better than the other portfolio of India if it is not performing right. Okay, that is the third point. Fourth point why you should invest in Nasdaq or US is that dollar appreciation and rupee depreciation. If you see, friends, we all know that dollar always appreciates and rupee always depreciates as compared to dollar. In 1947, $1 was equal to 1 rupee, but right now $1 equals 80 rupees. Okay, so what happens? You get a double advantage when you invest in the US stocks. Let me give you with a small example. Okay, suppose today you invest in one share of one US company at say $100, right? You invest, and 1 year later the price of that stock becomes $110 after 1 year. So what is your return? 10%. Now assume 1 year before when you invested the dollar was 80 rupees, okay, and 1 year later, just for the sake of example, right? Example, let us assume dollar went up by 88 rupees. Dollar to rupee is now 88 rupees, 10%. So what is the total returns you have got? 20%, 10% from the stock price and 10% because of dollar appreciation, right? So this is the advantage which you get by investing in US stock markets because of dollar appreciation also, right? So now let us go to the fourth chapter, which is the returns given by the Nasdaq. So friends, if you see, Nasdaq has outperformed Nifty 50, S&P 500 and almost all the major indexes of the world for the last 10 years, and it is the best performing index in the entire world. Okay, so let us look at the last 5-year returns first of Nasdaq and Nifty. For the last 5 years, Nifty has given a CAGR return of 12%, whereas Nasdaq has given return of 15.39% for the last 5 years, 2017 September to 2022 September right now. Okay, then if you extend the horizon last 10 years, if you take it, okay, if you see the returns, and these numbers I've taken from the ICICI Prudential presentation, mutual fund presentation, and they have calculated 10 years as on September 2021, right? September 2021, that is September 2011 to September 2021, that 10-year period they have taken. And in that, if you see, Nifty for that 10-year period has given return of 13.6% CAGR, S&P 500 has given 23%, Nasdaq has given 31% in the last 10 years, 2011 to 2021. Huge returns, Nifty 13, Nasdaq 31%, friends, okay? Huge, you can see the wealth created by Nasdaq companies. And obviously, so because 2011 to 2021, the top companies, if you see Amazon, Tesla, Google, Microsoft, Apple, all these companies went through the roof. They just boomed like anything during this particular period, okay? But if you see last 1 year returns, September 21 to September 22, okay, Nasdaq is down 23%, friend. It is down from its all-time high, 23% down, whereas Nifty is up by 1.25% in last 1 year. So which brings me to the next point actually, which is that it is a good entry point if you want to consider investing in the US stocks if you are a long-term investor, because the stock Nasdaq has corrected so much. It is a good entry point if you are a long-term investor, because in future there are good chances that your returns will be higher because of entry point is being very attractive valuation, right? Okay, friends, so let us now go to the next chapter, which is about the risks involved by investing in the Nasdaq or the US stock market. So if you see, friends, the first major risk is the top 5 stocks, right? The Apple, Amazon, Google, Microsoft and Tesla itself account for 43% of the entire Nasdaq portfolio. So 5 stocks together have 43% in the Nasdaq portfolio. So if anything good happens with this 5 stocks, your portfolio increase, and this 5 stocks something bad happens, again your portfolio will go down. So that is concentration risk is there in the Nasdaq. Second point is that high level of scrutiny on these companies. All these companies which I told you, Microsoft, Apple, Google, right, Amazon, these companies are always under high scrutiny around the globe, relating to some data privacy issues or or crony capitalism. These companies are accused of arm twisting lot of governments, or you would say influencing lot of, or eating the small capital or small business groups, and showing their business muscle power, right? So they are also under heavy scrutiny across that, so they have paid a lot of fines, penalties also across the globe. Third point is that if you see right now in the world as such, we are going through a challenging economic environment, right? And if the US was supposed to go into recession in the future, we don't know. We hope it doesn't happen, but if US goes into recession and stock markets are going to crash, the prices will fall, and hence so that is one another risk of economic challenge around the world, which you should be wary of if you are investing in the Nasdaq US, right? So now let us look out about some more details about these two products, Motilal Oswal and ICICI. So Motilal Oswal was started in the March 2011, right? It is like 11 years old now. ICICI Prudential Nasdaq fund was started last year only in October 2021. Expense ratio of Motilal Oswal is 0.56%, ICICI is 0.5%. Assets under management of Motilal Oswal is 5,470 crores, ICICI is 304 crores. And the price of Motilal Oswal ETF is 96 rupees, ICICI NAV is 8.48 rupees, right? And there is no exit load or lock-in period in both of these funds. And I have also given links in the description to this video of the website where you can find more details about these products, right? So friends, coming to the conclusion of this video, so if you are looking for newer investment opportunities, right, if you want to invest something in new and also looking for diversification, then I think Nasdaq index fund is a very good opportunity. And personally, if you ask me, I am currently not investing in this Nasdaq index fund, because the reason being is that I have taken some positions in the stocks of Indian companies, and I want to add some more quantity, good sizable quantity in the Indian portfolio. And once I'm done with that, then I would look forward to investing in the US. But if I had some extra money or my quantity goals were done in India, definitely I would invest in the Nasdaq funds. But right now I'm currently not doing. Okay, so this is all about US stock market funds. If you are interested, do make the best use of this video, and thanks for watching. Until then, this is C.S. Karthik signing off. Thank you and namaste.